May profits be upon you. Welcome to another weekly market forecast. Happy 2026. May 2026 be your best trading year ever. All right, let's take a look at gold. Gold. We're looking at the gold futures chart right now. And what do we see? Well, it's been on the tear, as you already know. All right. And we had this basing here, right? And we moved up, impulsed up, uh, we had a nice little pullback here, and then we made all new highs, all time highs here. All right, so far bullish, right? However, last week closed bearish. There's all kind of fundamentals going on right now with the Venezuelan invasion or whatever you want to call it. I don't know what kind of operation that they want to call it, but the U.S. Took out the former president of Venezuela, Maduro, and got him in Brooklyn right now, in a Brooklyn holding area to be seen in court and on charges of narcotics and all kind of mess. So that is probably going to spike, get gold to pop up a little bit, and because when there's tension, that's when gold starts to move higher. All right, so uh, this uh, bearish candle here is is pretty ominous, and the fact that it closed below the previous week and the previous to that week, uh, because it closed below the low of last week and the opening of the previous week. Uh, I would normally read this as a bearish indication, all right? But because of the fundamental news going on, that's probably going to kind of skew my analysis here. All right. I have this line being that the market closed last week just below that open. I had it as maybe the market would come up, retest this area, but and then start to move further down. However, the market gapped open, as you can see, pushing higher. Now this could flip bearish. This all this white candle could turn into a big wick higher and start to bear down if we see that the situation in Venezuela turns out to calm down and settle down a little bit, the dust settle. We could start to see the market move back towards the direction of my analysis. All right, let's look at the daily. What we can see is uh, oh, I forgot to mention, I'm sorry. What I forgot to mention is this bullish fair value gap down here. If the market was to continue bearish, if the market was to continue bearish, moving up and then coming down, I would think this area right here would be the area that the market may find support, because not only is it the open of this bearish candle, the one that created the swing high, all right, you see that same area being revisited by another bearish candle. I'm thinking this is an area that the market would find some support, or a road bump of any kind, of some kind, and this is where I'm thinking that we would get the pullback from, and then down after that. Um, but down here is where there is a fair value gap that is unmitigated, not untouched, and I'm looking for the Fibonacci retracement tool to tell me how how much the market may pull back. And to measure that, you put it from the low to the high, and you look at where that OTE level is. The OTE levels are 618, 705, 786. Anything below the 50%, this is the OTE level. If the market does turn bearish, this is where I would think it would find support for higher prices. This is the area that I think that we would see the turnaround. All right, because I will not ignore the fact that we had a surge, a rally up, a pullback, another rally up to break the highs, break structure, trade above, and then a pullback into this impulsive move, the correction to that impulsive move. I'm looking for that pullback down to an area where we see an opposing candle. All right. We see a fair value gap. This is the area right around between 618 and 705 on the Fibonacci. This is where I would think the market would find support for higher prices. All right. If we go down to the daily, you can see the opening candle is moving up higher, right? All right. And you can also see, where is it moving up higher for? It's reaching for this fair value gap, unmitigated, untouched. All right. If the market finds resistance here, this is where I would be looking on the lower time frames for an entry to a sell order so that I could take it down to this fair value gap that I just pointed out. You can hardly see it right now, but if I make it a little bit darker, you see. Okay. That's the one on the weekly time frame. It's a weekly fair value gap. Um, and that would be the interior uh, range liquidity, IRL. All right. This is the external range liquidity. We pull back to internal range liquidity here. And then we take out the external range liquidity because this is the way it works. Higher high, higher low, higher high, higher low, higher high. All right, that's when we're pulling back the internal range liquidity each time. All right, and just to take the next external range liquidity. You understand? Okay, good. All right, all right. Any questions? You make sure you ask me in the. What am I doing here? I don't understand what's going on. Why won't you go away? Okay, I gotta. My computer is misbehaving. I'm not sure why. Forgive me. All right. So that fair value gap is where I would think the market would find resistance, and then we could take an. I would be very interested to take an entry short here as soon as it gives me the signature on the lower time frames. I'll be looking on the 1 hour, the 15-minute, and the 5 for that signature that says, hey, the market is shifting from a bullish one to a bearish one. And then I would take the short down to my fair value gap here. That would be my first stop. All right. Coming all the way down here, that's a whole different matter. All right. We'll see what happens after it gets to the first target first. Okay, that makes sense. Now, should this market want to continue higher because of the tensions in Venezuela, that means it would break this fair value gap. And if it disrespects the fair value gap straight away, just we see it doesn't waste time with a bunch of small candles, maybe one or two candles, and it breaks this fair value gap, then it'll become an inverted fair value gap. And we could then use it for support for higher prices. All right. Does that make sense? I hope it does. All right. And that is it for my analysis here. I'm looking forward to this week and seeing how, within the next couple of days, how gold trades. Okay. Bear in mind we have NFP this Friday. All right, and this week, Monday through Wednesday, are the best times to trade. All right. You can trade every day, but with NFP, there's a big injection of volatility potentially, and it could reverse the market. So you want to be careful of your trades, trading the last 2 days of this week. Okay. I will see you in the next video. Hey, make sure you go and check the videos that I've already put out for the day, which is the NASDAQ, the pound USD, the Euro USD, and the US dollar. I'll see you in the next video. Thank you for watching. May profits be upon you.